Believe it or not, Warren Buffett wasn't born a billionaire. He had to start with a small amount of money just like most of us. So today we are going to listen to him share his best tips for growing a fortune from a small sum. Enjoy.
Good afternoon, Mr. Buffett and Mr. Munger. My name is Grant Morgan. I'm here from New York City. Earlier you had acknowledged that it is a more difficult investment and business environment today than it was when you first started out. My question is, if you were starting out again today in your early 30s, what would you do differently or the same in today's environment to replicate your success? In short, Mr. Buffett, how can I make $30 billion?
Start young. Charlie's always said that the big thing about it is we started building this little snowball on top of a very long hill. So we started at a very early age in rolling the snowball down. And of course, the snowball, the nature of compound interest is it behaves like a snowball of sticky snow. And the trick is to have a very long hill, which means either starting very young or living to be very old. I would do it exactly the same way if I were doing it in the investment world. I mean, if I were getting out of school today and I had $10,000 to invest, I'd start with the A's. I would start going right through companies, and I probably would focus on smaller companies because I would be working with smaller sums, and there's more chance that something is overlooked in that arena. And as Charlie has said earlier, it won't be like doing that in 1951 when you could leaf through and find all kinds of things that just leapt off the page at you. But that's the only way to do it. I mean, you have to buy businesses or little pieces of businesses called stocks, and you have to buy them at attractive prices, and you have to buy them you have to buy into good businesses. And that advice will be the same 100 years from now in terms of investing. That's what it's all about. And you can't expect anybody else to do it for you. I mean, people will not tell you about wonderful little investments. It's not the way the investment business is set up. When I first visited Geico in January of 1951, that rest of that year, I subsequently went down to Blythe and Company, and actually to one other firm that was a leading, Geyer and Company, that was a leading analyst in insurance. And I thought I'd discovered this wonderful thing, and I'd see what these great investment houses that specialized in insurance stocks said, and they said I didn't know what I was talking about. It wasn't of any interest to them. You've got to follow your own. You've got to learn what you know and what you don't know, and within the arena of what you know, you have to pursue it very vigorously and act on it when you find it. And you can't look around for people to agree with you. You can't look around for people to even know what you're talking about. You have to think for yourself. And if you do, you'll find things. Charlie?
Yeah, the hard part of the process for most people is the first $100,000. If you have a standing start at zero, getting together $100,000 is a long struggle for most people. And I would argue that the people who get there relatively quickly are helped if they're passionate about being rational, very eager and opportunistic, and steadily underspend their income grossly. I think those three factors are very helpful.
There are two things that I wanted to expand upon before moving to the next clip. First, Buffett said to focus on small companies. The obvious reason for doing this is small companies have more room to grow, so your investment grows with them. That's not to say that big companies are bad companies, but when you're starting out with a small sum of money, you have to take into account opportunity cost. Also, small companies are usually riskier investments than a bigger company. That's why Buffett said to start looking at every small company out there, so you can figure out the ones that have a good potential to keep growing. The second thing I want to reiterate is Charlie Munger's famous quote, "First $100,000 is the hardest." So at the beginning, I would honestly just get a job and try to save up the initial amount. That's just my personal opinion. You guys can do what you feel is best for your particular situation. And as you have more money, it becomes easier to make even more.
Recently at a talk at the Wharton Business School, Mr. Buffett, you indicated that you were talking about the problems of compounding large size, which I appreciate and understand. But you indicated, you're quoted in the local paper as saying that you are confident that if you were working with a sum closer to $1 million, that you could compound that at a 50% rate. For those of us who aren't saddled with the $100 billion problem, could you talk about what types of investments you'd be looking at and where in today's market you think significant inefficiencies exist? Thank you.
Yeah, I think I may have been very slightly misquoted, but I certainly said something to the effect that working. I think I talked about this group I get together every 2 years and how I poll that group as to what they think they could compound money at it with 100,000, a million, 100 million, a billion, and other types of sums. And I pointed out how this group of 60 or so people that I get together with every couple of years, how their expectations of return would go very rapidly down this slope. It is true. I think I can name a half a dozen people that I think could compound $1 million, or at least they could earn 50% a year on $1 million, have that as an expectation, if they needed it. I mean, they'd have to get their full attention to be working on the sum. And those people could not compound money, 100 million or a billion, at anything remotely like that rate. I mean, there are little tiny areas which, if you follow what I said on the screen there on that Adam Smith's interview a few years ago, if you start with A and you go through and you look at everything and you find small securities in your area of competence that you can understand the business, I think you can, and occasionally find little arbitrage situations or little wrinkles here and there in the market. I think working with a very small sum, that there is an opportunity to earn very high returns, but that advantage disappears very rapidly as the money compounds, because from $1 million to 10 million, I would say it would fall off dramatically in terms of because there are little, you find very, very small things that you can make, and you're almost certain to make high returns on, but you don't find very big things in that category today. I'll leave to you the fun of finding them yourselves. I mean, it'd be terrible to spoil the treasure hunt. And the truth is, I don't look for them anymore. Every now and then I'll stumble into something just by accident, but I'm not in the business of looking for that. I'm looking for things that Berkshire can put its money in, and that rules out all of that sort of thing. Charlie?
Well, I would agree, but I would also say that what we did 40 or so years ago was in some respects more simple than what you're going to have to do.
Right.
We had it very easy compared to you. It can still be done, but it's harder now. You have to know more. I mean, just sifting through the manuals until you find something that's selling at 2 times earnings, that won't work for you.
It'll work, it's just you won't find any.
Yeah.
Well, in this clip, Buffett gave pretty similar advice. If you have little capital, then just start going through all the small companies in the industries you understand and try to find the one that is selling at an attractive price. Charlie brings up a harsh truth, which is it's a lot harder to find undervalued companies today than it was 50 years ago. That's because there are way more investors who are looking for these deals, and there are supercomputers too that are trying to take advantage of any inefficiency in the market. This all just means we have to look longer and longer for opportunities. One last thing I want to mention is Buffett said it's entirely possible to get a 50% return with a small amount, but I want to remind you it's extremely hard. It's even harder to get those types of returns year after year. So please keep that in mind and don't fall for a scammer who is promising you insane returns to scam you out of your money.